They want you to panic. They want you to sell. And when you're forced to the brink, when the streets are painted with despair, that's when they pounce. What you're seeing now, this isn't a correction. This isn't a dip. This is just the opening act of the biggest wealth transfer in human history. You think you've lost a lot already? You think you've sold at the bottom? Think again. Right now, everyone is scrambling to offload their assets. You're selling at $50, but someone else is dumping at $40. Who's winning? Not you. For the elites, the mega rich, the real players who are about to buy everything you own, the price isn't low enough yet. When will it be low enough? When everything is desolate. When even those who never touched the market are drowning in losses. When assets are practically given away. You heard that right. This isn't a conspiracy theory. This is a cold, calculated game. And the end of this crash is simply the starting gun for them to sweep in and acquire the world. This is when the financial crisis truly begins. This is when the life's work of millions becomes the property of the few. The great wealth transfer. Is this real? Absolutely. If you've been following me, you know for months, even years, I've been talking about this. Remember when Warren Buffett started dumping US stocks and piling up cash? Everyone laughed. Old man lost his touch, they said. They were too busy buying at the peak, fueled by promises of a booming economy. Now, with one swift tariff strike from the US government, those same people are choking on their losses. And Buffett? He's the undisputed winner. He didn't just sell at the top, he sold what he sold for a reason. His moves laid out the entire game plan. Last year, people scratched their heads when Buffett sold Apple shares, his biggest holding. Now it's crystal clear. Which country is the US slapping with the most tariffs? China. And where are most iPhones, laptops, and Apple headphones made? China. What does that mean? If Apple wants to sell China-made phones in the US, they're hit with crippling taxes. You, the American consumer, pay more for a phone designed in your own country. Apple stock plunged 35%. Buffett didn't just avoid the market crash. He sold off the very stocks that would be crushed by new tariff policies before they even took full effect. This isn't coincidence. This signals that no matter who's in the White House, the blueprint for this crisis is already set. Tariffs are just one tool to ignite the fire. So, what's the end game? Look at Buffett's next move. He sold Bank of America, his second largest holding. Coincidence? What about Bill Gates, Mark Zuckerberg, Elon Musk? They all sold significant portions of their own company stocks last year. More coincidence? And Lai Ka-shing, the Hong Kong billionaire. Why is he desperately selling his ports and stockpiling cash? Many say political risk. Nonsense. This is a two-act play. Act 1, the global interest rate game, sucking money into the US. Act 2, playing out now, the tariff war, forcing global assets and economies to bleed out, making them ripe for picking. The tactics are different, but the goal is the same: global asset capture. If you don't want to be a victim of this asset massacre, if you want to climb the social ladder during this chaos, keep watching. I'm going to lay out exactly how this plays out and how you can position yourself. And if you're worried you'll forget, hit that like button now. It'll save this video so you can come back and execute. Let's get brutally honest. What happened after the US hit with tariffs? US stock market crashed, right? Most people only saw the plunge. But where did that money go? 6.6 trillion evaporated in just 2 days. Evaporated means it didn't just disappear. In a market, for every loser, there's a winner. Who holds the stocks that crashed? You, retail investors and foreign investors. Conservative estimates say at least 80% of U.S. stockholders are retail or foreign, meaning that $6.6 trillion didn't just vanish. It transferred from your pocket to the pockets of the short sellers. Who are these short sellers? Beyond the hedge funds like Soros I've mentioned before, who had insider knowledge of the tariffs? Who could short the market before the announcement? Right at the peak of the crash, Trump himself tweeted that it was the best time to buy stocks. Hours later, he publicly announced a 90-day pause on tariffs. The market, in free fall, exploded upwards. What does this tell you? The U.S. stock market's direction is now dictated by a single tweet or policy shift from a former president? Is this insider trading? You decide. If you've been following my channel, you know what pressing issues the U.S. government faces. 1. They're out of cash. The U.S. Treasury is running on fumes. Government shutdown looms. 2. No one wants to buy their bonds anymore. Since 2021, U.S. bonds have been in a massive sell-off. No one wants to lend America money. How do they solve problem 1, no cash? If the stock market can be swayed by a tweet, it's nothing but a government ATM. When the Treasury is empty, they can intentionally trigger market volatility to fill their coffers. First, create a crisis, short the market, rake in cash, then pump it back up to lure in the next wave of dumb money, the retail investors. The crash needs to be swift and sharp, but not too long, so investors don't die off completely before the rebound. You might think this is crazy, but this isn't my theory. Trump himself alluded to it. A longtime friend of his, an individual, made $2.5 billion in a single day during this very market crash? Does that sound like an accident? This crash is a direct transfer of wealth from citizens to the powerful elite and the government. And problem 2. No one wants to buy U.S. bonds. How do they fix that? I've said it before. They want to force money from the stock market into government bonds. When tariff news hit, bonds did rally for 2-3 days, but they opened high and closed low with massive volume. This means big Wall Street institutions, forced to hold bonds when no one else would buy, used this rally to dump their holdings and stockpile cash. Why? Because they're loading up their ammunition for the real buying opportunity at the bottom. And if the U.S. government actually fixed its debt problem, the elites would lose their control over America. So the bond rally was a mirage. Even China and Japan are secretly selling U.S. bonds as a counterattack to U.S. tariffs. Trump's attempt to shift money from stocks to bonds? A spectacular failure. So the tariff pause? It temporarily solved the cash problem for the U.S. government, but it backfired globally. Many people are now looking back at my video from a month ago, "The last opportunity to get rich in your lifetime is here," saying it's all coming true. This tariff imposition? It was a test run. Tariffs, like interest rate hikes, are designed to explode the global economy, allowing U.S. capitalists to buy assets everywhere. The difference? This tariff round became the igniter for the financial crisis. When interest rates rise, global money flows to the U.S. Everyone sells their own assets and currencies to chase U.S. dollars. This devalues global assets. Then, U.S. capitalists sell their inflated U.S. assets and use their high-value dollars to buy up the world's depreciated assets. That's Act 1. Act 2, tariffs, is a direct robbery of your nation's wealth. Example, U.S. slaps a 40% tariff on Vietnamese goods. You used to sell a component for $10. Now you have two choices. 1. Raise your price to $14 to maintain profit. But your product becomes expensive. Sales plummet, you lay off workers, your economy shrinks, and your currency crashes. 2. Absorb the tariff. You still sell for $10 but pay $4 to the US. Your profit disappears, you go bankrupt, mass unemployment, economic recession. Either way, your country earns less US dollars. Your national assets, factories, businesses, resources are fire sold. And critically, your currency devalues against the dollar. This is when US capitalists, armed with their soaring dollars, sweep across the globe, buying up currencies and assets at rock-bottom prices. Yes, US stocks will initially crash with this, but the entire global stock market will crash with it. This is a winner-take-all game, a global race to the bottom. In the short term, average Americans will suffer higher prices, inflation, unemployment, market crashes. But this isn't just an American problem. It's a global economic implosion triggered by tariffs, just like 2008. But after 2008, the US recovered fastest and strongest. Why? Because when the global economy collapses and assets are cheap, US capitalists buy everything. The US might face a recession, but if everyone else is worse off, then the US is still the best place to be. Global capital flows back to the least bad option.
This tariff play, this interest rate play, they are all designed to drain dollars from the global system, making global assets cheap. But tariffs are different. They can spark a full-blown global financial crisis. It's like a war, but the blast radius is global, and everyone outside the US is in the kill zone. Some believe Trump wants to bring manufacturing back to the US. I laugh. The US can simply print money and buy all the world's resources and products made by sweat and tears. You want Americans to go back to being farmers and factory workers? No. History is repeating. Tariffs are a massive wealth transfer disguised as trade policy. They appear to hit other nations, but they really hit the ordinary citizens worldwide. If you're a business owner or investor, your assets will devalue. If you just work hard, you'll face inflation, rising prices, recession, and currency devaluation. All of this silently transfers your wealth to the US capitalists. If you missed the first phase, if you didn't de-risk, if you don't have cash or defensive assets, you can choose to be complacent, watch the capitalists pillage, and see your wealth vanish. Or you can act. The Buffetts of the world know. They see it coming. They position early. Our advantage as retail investors? Flexibility. Buffett needs months to position. We can wait for the inevitable money flow, for the precise moment prices are about to surge, and then enter.
The key is this: the big players create the trend. We just follow the trend, make our money, and get out. Tariffs are also a bargaining chip. If your nation doesn't want tariffs, you comply with the US. You buy US bonds. If you resist, your national assets are sold off cheap to US capitalists. Right now, Buffett, Gates, Zuckerberg, and we, the smart money, are holding massive amounts of cash, waiting to buy at the bottom. This tariff round was a test. Who sinks, who swims, who resists, who buys US bonds. And the result? Many nations resisted but ultimately sold US bonds, causing their value to plunge 8%. The dollar kept falling. Capital fled the US. This is why I consistently warned against long-term US bonds. Last year, I converted dollars to gold and yen. When the global market plunged, smart money fled the US, not bought into it. This means the world, when forced to choose between buying US bonds or facing a financial crisis, chose the crisis. This time, the US tariff game might be irreversible. US stocks, currency, and bonds are all free-falling. Saving one won't save the others. And the Fed? The professional capitalists behind them aren't rushing to save it. Why? Go watch my previous video for the full explanation. If all three markets are dying and no one is coming to save them, the US government only has one path: reborn from the ashes. Trigger a financial crisis, let the whole world bear the brunt. That's how they win.
So you must understand which stage we are in and why US stocks are falling so fast. It's margin calls. I buy a stock for $100. It goes to $200. I want more, but I'm out of cash. I borrow $150 against my $200 stock. Tariffs hit. Market crashes. Bank demands $150 back. I don't have it. Bank sells my stock. If millions are in the same boat, mass liquidations hit the market, regardless of price. This creates a global liquidity crisis. Many sellers, few buyers. Assets become unsellable. This is just the beginning. To solve this liquidity crisis, the Fed has to act. Two choices. 1. Intervene now, keep rates high, inject money. This means US stocks don't crash too hard. They print money to keep the dollar flowing, but the government still pays high interest. The market might recover slightly, but no massive boom. Maybe even a long-term decline. 2. Wait for a full-blown financial crisis, then unleash unlimited printing and 0% interest loans to US capitalists. This is what happened in 2008 and 2020. This aligns with the interests of the elites. If the US uses tariffs to trigger a global crisis and the global economy is worse than the US, then the US becomes the ultimate safe haven. US bonds find buyers again.
When the world collapses and assets are fire sold, the big players just print money, borrow at 0% and scoop up everything. US stocks and global assets flow back to US capitalists. The US solves its bond problem, and interest payments plummet to 0%. That's why I've believed since last year that triggering a financial crisis to return to 0% interest and quantitative easing is the higher probability outcome. And it's why Buffett sold bank stocks. When the financial crisis hits, no one can repay banks, and banks immediately lose immense value. If you're smart, you've already recognized the opportunity. But it's not now. Prices can still swing wildly on a single government announcement or plunge catastrophically. If you jump in now, you might make quick money, but not big money. You might win today, lose tomorrow. Cut losses constantly. This isn't the time for short-term trading. So we hibernate. We focus not on what will go up, but on what will preserve our wealth. That's why I converted dollars to gold and yen last year and am holding firm. We've even tested shorting Tesla with good results, but that was just a test. The real shorting will happen when the Fed or the US government uses tariffs to trigger a full-scale US stock market collapse. Then we short aggressively. When the Fed starts quantitative easing and pumping money, we'll slowly follow the trend and buy the bottom. That's our grand strategy.
In 2008, many were construction workers or waiters. Now, they are the wealthy mentors around me. The class system solidified after 2008. Those who were waiters now generate more wealth in a month than many earn in a lifetime without lifting a finger. I was too young then. I missed it. But this time, the opportunity is here, and I'm ready. If it truly happens, I'm prepared. Sleeves rolled up. If it doesn't, what have I lost? Nothing. I'll just reallocate. So, if you don't want to miss the next market entry opportunity, you must prepare now. Align your mindset with mine.
Understand the investment philosophy I share and make it your own. Don't wait until the moment hits and ask, should I buy now? Can I still get this asset? I'm stuck with losses. What do I do? Once the opportunity passes, who knows how many years you'll wait again?
The global situation is only getting more volatile. I share free knowledge on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, subscribe to my channel, hit the notification bell, and share this video widely. I sincerely wish all of you who liked this video achieve financial freedom soon. If you found even 1 or 2 useful insights today that help you live better, I'm content.